Welcome back. You're watching Buy Now, Sell Now on ET Now, and time for the high risk and low risk ideas from our experts. And starting with Kunal. Kunal, what are your ideas for the viewers today?
Well, first one which I'm suggesting is from the PSU pack. It's a buy on Coal India. I would term this as a more of a low risk trade because of the very slow, steady, and the gradual nature of the stock price in terms of trend. So today it's given a confirmation of a minor breakout in the swing charts about that 140, 142 mark. So would suggest a buy on Coal India for a target of 155. Stop loss could be kept at 137. The second one which I'm suggesting is from the PSU banking space. I think Canara Bank is the stock which is looking extremely strong on the daily time frame. I think if I'm not wrong, it's also confirmed a breakout above its 50-day moving average today after this strong intraday uptick so far. So on the backdrop of this, I believe many of the PSU banks like SBI, etc., they are also looking very strong. So on the backdrop of that, entire sector looking strong, I would suggest a buy on Canara Bank. Targets to be kept at 175. So expecting at least another 15% on the upside from current levels. Stop loss to be kept at 142 levels.
All right. Raghavendra, coming to you on your high risk and low risk ideas, what do you see as attractive right now?
Let me start with my low risk, low reward idea, that is Laxmi Organics. This very fresh listing, which came in March of 2021, just 2 months back, is a great stock to buy. Our oversubscribed IPO with a blockbuster listing is a precursor to a wealth-creating stock. So we believe Laxmi Organics could do very well for a target of 330, at least from 9 to 12 months from here on. This stock is currently a hidden gem. As the company comes out with their quarterly earnings, many brokerage houses and research analysts would start covering this stock and have institutional ownership by same time next year. The company has acquired an Italian firm, Metene, in fluorospecialty chemicals. This could be a game changer for Laxmi Organics in the quarters ahead. Currently, the main products of Laxmi Organics are ethyl acetate and dictate derivatives. Both these products have gone up in terms of prices 4 times in last 18 months. We believe this is a high research and development product and a high margin product. So the margins of Laxmi Organics would continue to do well. Hold Laxmi Organics from current levels for a target of 330, that is 50% upside in the next 1 year. On the high risk, high reward idea, we have Triveni Engineering. This sugar stock is a market cap of 3,500 crores. The overall ethanol policy in terms of blending with fuel would be a big catalyst on the upside for the entire sugar stocks. Triveni Engineering would gain significantly from this. We believe a full year EPS of 21 with a P multiple of 10 would give a target of 210 to 20 in Triveni from current levels. The 68% promoter holding for Triveni is very comforting. So hold Triveni at current levels of 145 for a target of 220 in the next 9 months to 12 months. Thanks.
Right. All right. So those are the high risk, low risk ideas coming in from both of our experts. And now time for the viewer query. So let's get going with that. We've got a first viewer query from an email. And this is from Ashwini from Hyderabad saying that, can I buy Praj Industries at current market price? Kunal, Praj Industries, the stock is soaring in trade. It is at record high levels today. So it doesn't make sense to enter Praj Industries currently?
Well, I think it's very, very tricky because at these levels of 298, 300, where the stock is trading, it's gone through an exceptional kind of an uptrend, already up more than 150, 160%. This year YTD. So in the last 4-5 months, we've seen the stock more than doubling from its previous year close. So I think in that regards, it's run up too fast, too swift. But these are the kind of breakouts which stocks they generally see when they go through multi years of possible uptrend. So if you are in from a longer term haul, then I believe you can start buying the stock at current levels. But just be one level of cautiousness that it's possible because of the steep sudden uptrend in the last 4-5 months, the stock may also go through a corrective phase. So You should not buy all your expected quantity at current levels, and have a staggered approach. So if you start buying, say for example, at current levels, then use at least a 10 to 15% dip kind of an approach to try and chip into the stock as and how the stock goes into a corrective phase.
All right, Kunal, I want to come back to you on this one. We mentioned metals when we set up the viewers for the show that we did or that we're doing right now. NMDC opened gap up, and this is something that Santi is also pointing out. And he's been holding this counter for the last 5 years, bought at a level of 1609. Rather, he's bought at a level of 100. Let me just confirm that he's bought at a level of 134, and he's holding for the last 5 years. What he's asking is, if the metals super cycle continues for the next 1 to 2 years, is it possible for the stock to double? And he points out that the RSI is at 88 plus.
So exactly. So short term wise, there is a lot of concern, which is there for the metal space, because the RSIs have come back into such an overbought and overheated kind of territory that it becomes very difficult to initiate, short term trades on such kind of stocks. But metal stocks, and I'm not sure if many viewers actually know this, but metal stocks, they are very, very high beta in nature. They're in fact one of the highest beta sector when you try and compare with the historical analysis for sector behaviors on the NSE. And apparently when these stocks, they go into strong uptrends, the uptrends, they not just last for a longer duration of time, but the pace and the intensity of uptrend is far more vicious and far more stronger, like what you've seen in the last 2-3 months, that many of these metal stocks have picked up pace. It's just that off late you are seeing the pace getting on a much higher territory, and they change their cycle. I think in that aspect, I believe that there should be a much more stronger upside for many of these metal names. But again, the catch is that short term charts are extremely overheated, so you might expect some corrections coming by. I would suggest a classical buy on dips kind of a territory or an approach for these metal names. So whether it's NMDC, whether it's SAIL or such other large cap names, I think you can start buying at current levels, but then be ready for these stocks anytime. Then they can go through at least a 10 to 15% of a swift correction. So keep your powder dry and keep on buying on dips. I think that's a better approach for metal names.
Our next queries come from Satya Narayanan. He is saying that following up from last week, what you've spoken about Just Dial, Kunal, he's saying the Just Dial has dropped to around 800 rupees per share zone. He bought the stock at around 900 rupees. He wants to know whether he should book loss and what will be the impact of JD Mart on Q4 results. I'm unsure if you can speak on that, Kunal, but nevertheless, what's your call on Just Dial?
Charts, I believe that Just Dial is a stock which is evolving, and I think it's taking its own time to try and break out of that big, I would say, shackle of resistance around this 1,000 plus levels. But it's a stock which moves into those very odd periods when you see the market going into a full swing uptrend, like what you saw in the month of February, for example, when the markets were into a full swing uptrend. You saw mid caps, small caps, large caps, all of them breaking out of their resistances. Even Just Dial in that month had broken out from those levels of 600, 670 to almost touching the 1,000 plus mark as well in a matter of 10 to 15 trading sessions. So I think it's a stock which is of that intensity. It remains low for prolonged period of time, but whenever you see a breakout, it tends to cover up the underperformance. So I don't see a reason why you should fret over here. If you are in from a longer term haul, then I believe you can hold on to your investments on Just Dial.
Okay, let's pull up HUL then, and we've got a question, I believe, on the mail. We've got it from Ashwini Kumar in Pune, and Ashwini is bought at levels of 2,441 and is asking, should you hold for the long term? I'm going to take this across to you, Raghavendra. Is this the pick for you in the FMCG space, and would you say that this is something that you should hold on?
I would say that for the entire FMCG space, the good times would continue. We have a very good forecast for the monsoon going ahead, and overall, the government is expected to come out with more populist measures, so that could trigger the urban story. HUL will be a direct beneficiary of this, though fundamentally it might look expensive to its peers. but that is what a premium quality stock, which has consistently delivered good returns, would do so. So hold HUL if you are currently holding for a longer term upside. This is a core portfolio stock and let it be that way. If you are a fresh investor looking on HUL, then look for any dips or a broader market correction to enter into this stock, Hindustan Unilever.
And staying with HUL, there is a query that's coming from Sherry saying that I have HUL 2360 May put at 65. Now the price is 18. Should I hold or sell? Kunal, what's your take? What should Sherry do? HUL 2360 May put at 65.
So in fact, 2350, 2340 levels is apparently the support for HUL on the charts. And if you look at it in the last 2 weeks or 3 weeks, because options require very short-term kind of a time frame when you look at the charts comparatively. So that stock has bounced off from those 2340, 2350 levels. So I think I would sense that your put option would probably get in the money and give you decent profits if the stock actually breaks that 2350 mark. So rather than initiating probably an anticipatory trade that whether the stock will break down or not, I think it's better that you wait for that breakdown confirmation. I would suggest an exit on your put options on HUL, and only if the stock breaks below that 2350 mark, because that could confirm a breakdown for HUL, and that could probably result into at least 100 to 120 point drop in the stock in probably the near term. I think below that you can look to buy some out of the money put options, so maybe a 2200 or 20 to 40, 50 strike. I think that could be a better option to try and trade. But I would suggest a trade only below 2340 levels.
Okay, we've got several questions. I'm going to go across to now Raghavendra, and this one is from Sagar. Adani Transmission bought at levels of 250, and Sagar has got a very so obviously he's bought it a long time back. He's looking at levels of 1400 plus. Is this a possibility? Is there something that would confirm this positive bias for him?
Well, if you see the entire Adani pack, be it Adani Transmission, Adani Green, Adani Ports, these stocks have been significantly up, surprising most of the investors and traders on the street. So the great run continues in overall Adani Group. Now, coming specifically to Adani Transmission, this has been a laggard of lately, but broadly, the overall thrust of government policies on power transmission would augur very well for Adani Transmission. So a structural change in government policy would be very benefiting to this transmission stock. So my advice to Sagar would be to continue to hold this with a positive bias. It could come out of this consolidation, mild correction, and outperform the broader market from here on.
All right, our next query is from Rajan Vittal saying that is it a good time to enter Tata Consumers, or should he wait for some more corrections? Kunal, what should Rajan do with Tata Consumers? Wait for a correction, or is it a good time to enter?
Stock is already going through a corrective phase. Cheryl, I think from 700 or 695 approximately, which the stock had hit 2 weeks back, it's already come back to that 620, 625, and it's a stock which gives you those very odd periods of 10 to 15% correction. So from the highs, the stock is already at a 10%, approximately 10% lower level. So I think it's a good enough territory where you can start nibbling into Tata Consumers. But again, as I said, that because the markets are such that you might probably get an odd period of correction sometime in between, that it's better that you have some powder dry, so that you can try and chip into the stock if these stocks come back to their another support territory on the downside. So maybe a 570, 575 could be the next level of strong support for Tata Consumers. So a buy on dips is what I would suggest for Tata Consumers. And also, I think with a time frame of at least 1 to 2 years, if that's the kind of time frame, then I believe that possibility a 750, 800 kind of a target range is possible for Tata Consumers.
All right, our next query is coming in from Shubh Mathur saying that he would love to know the long-term outlook for Max Health. Raghavendra, what about Max Health?
Again, the entire healthcare space is doing well post March 2021, and with the wave 2 and a possibility of wave 3, we believe this could continue. be it a pharma company or a healthcare space or a diagnostic company or companies which are majorly in the insurance space for healthcare. So Max Healthcare would also be a beneficiary going ahead. The management in their last quarter's commentary has cited of some structural changes in the way they would approach business and the growth plans. So if they successfully implement that, one can put some hope and faith in this company. Watch out for the next 2 quarters earnings. But till then, that would be a hold on Max Healthcare, considering the company is in sync to the bullish commentary and the earnings have been steady for Max Healthcare.
All right, our next query is coming in from Sahil Mathur. He wants to know if there's any recommendation for a fresh entry into the gas space. He is looking at a medium to long-term horizon. So, Kunal, any recommendations? Which are the stocks that look attractive in the gas space?
Typically, we talk of the two names, that's IGL and MGL. In that space, and I think specifically IGL looks very, very attractive to me on the chart share. It's been a stock which has a very good history over the last 10 years odd. The stock has done phenomenally well. I remember, I think from 40-45 rupees odd, the stock has already gone to 10x kind of returns. And every time when you see the stock going through that classical 20% correction, it tends to restart its cycle and makes a new high somewhere down the line. So with that kind of a time frame, with that kind of a impact on the charts, I would suggest IGL is a better buy. MGL is emerging to be a breakout candidate, but the data is a bit limited as compared to IGL. I think if you want to bet, I would suggest that maybe have 75% of your 65 to 75% of your investments on IGL, because that seems to be a stock which has a credible history and seems to be more stable stock. And the balance you can look at buying MGL. So I think you can probably try and proportionate your investments into the gas stocks in that kind of a percentage. IGL seems to be a better chance, and I think if the long-term story plays or remains intact for the stock, you might see even levels of 650 to 700 over the next 12 to 18 months.
All right, Raghavendra, coming to you on this next question, we've got Pranav Dangi, who's bought Rain Industries at levels of 130, stock currently trading handsomely above that buy price, 184 or so. But Pranav is looking to hold for the long term. Should he do so?
Yes, Rain Industries has come out from a multi-year consolidation, and currently the recent uptick from 140 to 180 has seen some institutional buying as well. So my advice to the caller investor would be to hold Rain Industries, enjoy the upride. The stock is all poised for a 240 target or even more. The broader sector is doing well. So Rain Industries, though the current position of the caller is in profit, but ride your profits and hold the stock for an upside target of 240 in the immediate term. Won't be recommending to sell at those levels of 240, but rather review in terms of the earnings, in terms of the P multiple. So currently hold the profitable position.
All right, our next query is coming from Nino Kuruvilla, wants to know what's the short-term to medium-term outlook on Oberoi Realty. Raghavendra, what's your take coming in on Oberoi Realty?
Realty Pack did well, specifically the Maharashtra or Mumbai-based developers when the stamp duty was significantly reduced in 2021. So that uptick or that positivity is already factored in the stock. But considering the debt levels of Oberoi Realty, we would prefer to have an avoid on Oberoi Realty, or rather the only realty stock we have recommendation on the portfolio is Godrej Properties. So specifically for Oberoi Realty, since most of the positivity is factored in, this could be a selling opportunity and exit the stock at current levels.
Okay, coming back to you on the next one, we've got Syed, who's asking for views on Lakshmi Organic at current levels. Kunal, coming to you on this one.
Don't track the stock that often, Alex, so may not be able to give you a view regarding the same.
And I think this is also something that a few other people want to know about. What would you say is an attractive entry price for a long-term investment? Kunal, can you hear me?
Yeah, is that for me? Which stock is it? Can you repeat that, Alex? I missed it.
Yes. Eicher Motors for the long term, what according to you would be the right price to enter at?
I think the current price itself is a fantastic price for many of these auto stocks. You know, I was looking at the charts for auto index over the weekend, and many of these auto stocks have gone through their 20 to 25% correction, which in the larger scheme of things now, when we are talking of a fantastic uptrend which has come into the markets from March 2020 lows. And you know, those sectors, every time when the market goes into a new phase, there are some sectors, old sectors, which tend to go through a 10 to 20, 15 to 20% odd correction. The same happened for Bank Nifty, the same happened for Nifty IT, as well as for the pharma index in the last 5-6 months. And whenever we've seen that correction shaping up into these names, somehow the correction has resulted into a new wave of buying for these sectors. So I believe a similar could probably happen for auto stocks as well. These stocks have already gone through their 20-25% correction. Same is the case with Eicher Motors from 3,000, 3,100. It's come back to 2,400 levels. So I think at current levels of 2,400, it's an attractive buy, specifically when the auto cycle would revive, which I believe could probably happen in the next 3 to 6 months. I believe there's a possibility that Eicher Motors and the other auto stocks, they could come back to hit their previous swing high. So at least a 20 to 25% upside over the next 6 months to 12 months is where I would place targets on these auto stocks, including Eicher Motors.
All right. Our next query is coming in from Aniket Gandhi. He wants to know whether it's a good time to buy ITC for the long term. Raghavendra, what's your take coming in on ITC? We spoke about HUL, but what about ITC?
Well, if you look at ITC compared to any other FMCG stock, it is trading at a very deep discount or a cheaper valuation. So the headroom of upside in ITC would be significantly good going ahead. That said, in the last 2 quarters, their hotel division has fared okay, but their paper division has done extremely well. Their focus on non-secret business is also auguring well in terms of the earnings. Management 6 months back have said that they would come out with a more generous dividend policy. So hold ITC for a catch-up play to other FMCG stocks for a better dividend expectations. And as the good monsoon, we believe overall FMCG space would do well. So ITC at current levels is a good entry point. One should buy here.
Okay, coming to you, Raghavendra, on the next one as well. Siddharth has got a question, and it's a very simple question, I guess. Long-term view on IT. He's asking you to pick the best IT company, and I think depending on who you ask, it is TCS, HCL Tech, or Infy, or TCS, Infy, HCL Tech, in that order. What, according to you, is the top pick?
Well, IT we are bullish, and to us, Infosys is the top pick from the large cap space, considering their buyback also going on. So that would be a good price support to the stock for Infosys. In a broader IT space, from the mid cap space, we are very bullish on Birlasoft and First Source Solutions. So that would be these 3 names from the large cap: Infosys. From the mid cap space, Birlasoft and FSL would be our top recommendations in the information technology sector.
All right, next query is coming in from Pawan Kumar. He wants to know what's the view coming in on Amara Raja batteries, given that the automobile production is being on a halt. Kunal, this one specifically for you. He wants to know, does the chart also show some bearish trend along with the bad news, given that the automobile companies are actually halting production due to surge in COVID-19 cases? So what's your view coming in on Amara Raja batteries? What are the charts showing?
Yeah, somehow the stock has struggled in the last 5 months from 1,020 range. It's come back to sub 800 level. So, as I was discussing earlier, that many of these auto stocks have gone through their routine 20 to 25% correction. That has also happened for the auto ang space and very specific names. It's not happened for all of these auto stocks. Yes, the battery stocks like Maharaja Battery, and I think even if I'm not wrong, Exide Industries as well has corrected from 215 levels to 180, 185, kind of a range where the stock is trading. So these stocks have gone through their corrective phase. But again, it's very difficult to try and look at a momentum buy at current levels, because momentum requires either stocks to form some sort of a divergent signals or some sort of pickup of momentum, pickup of pace, where you can establish a short-term bottom in place. Amara Raja Battery, for example, for last 5 months have been making pattern of lower highs and lower lows. So if this month high, which is around 803, if that gets taken out for Amara Raja Battery, then we can establish a case that the stock is going through a resurrective mode. So I would suggest the wait and let the stock cross about that 803, 805 hurdle. Beyond that is where one can start nibbling into long positions on the stock.
Raghavendra, I'm going to have to request you to keep your answer on this one very short. We've got Parth, who's bought UTI AMC in the IPO and is asking whether to hold on at this juncture.
Sorry, I missed the name of the stock.
UTI AMC.
Okay. So broadly, the entire asset management space is doing well. We have seen the results of Nippon extremely well. UTI AMC, HDFC AMC, SBI AMC, they have shown good numbers. So UTI AMC would be a hold or buy at current levels.
Thank you so much for sharing your view. In fact, thank you so much to everyone who logged on and asked your questions. To those of you who didn't get their questions answers, we'll be back tomorrow at the same time, 11:15, and we can get your questions answered at that time. On that note, let me thank both Kunal as well as Raghavendra. Thank you so much for joining in and for helping us out. We're slipping into a short break, but more on the other side. Do stay tuned.
Powered by Century Ply, आग से बचाए.
All leaders in individual sectors.
What's the sense that you're getting on volume growth?
Just clarify this entire case.
What is it going to mean for the business?
What else are you looking at?
It's clearly one of the biggest deals.
Now I've been getting you bit by bit.